Hello traders and welcome to another video review. Today is Monday, December 29th, 2025. Let's take a look at the Forex economic calendar for today. As we are narrowing the end of the year, the economic calendar might be a little bit lighter with the data releases, and this is one of these Mondays. S&P manufacturing PMI data from Russian Federation down from 48.3 to 48.1. We are still waiting for the France job seekers total at noon. Then we have pending home sales from the US at 4 o'clock. At 4:30 we got crude oil inventories and Cushing crude oil inventories. Then at 5 o'clock we got CPI from the Russian Federation. That's about it. So without any further ado, let's switch to the charts. We start with euro dollar. So after the Christmas, we got a little bit of the deterioration here in the price of the euro dollar. Nevertheless, it's still not that much. This trend line is being respected every time we slide lower, so that's not a surprise. The same situation happened just recently. Apparently, even you can say it happened today. So this one here, this technical resistance will be moved a little bit higher. I will apply this technical resistance a little bit here to the extreme of the December 24th 1.1807, and we got a little bit of a narrower technical resistance here, corrective pullback towards the trend line. Very technical market, as we are we've been seeing the multiple bounces from the trend line, so that means the euro dollar market sees the trend line and it respects this trend line. The next technical support is located roughly around the level of 1.1707 with this kind of momentum at the level 52, which is just oscillating a little bit lower towards the neutral level. We can see the euro dollar moving like this to the end of the year. British pound in tight consolidation on a 4-hour time frame chart. We hit the target located at 1.3292, local swing high 1.3533, and since then, as you can see, the market has been seen consolidating in a very narrow zone. So all of these measurements here that we got for the pullbacks are right now not relevant, because it looks like the market wants to do its own game, and this game is to consolidate and wait for a breakout after the major technical resistance has been hit. The next target for bulls 1.3587. Nevertheless, first we need to move out of this range. As you can see, momentum moving lower as well towards the level of 50 is telling us that basically we don't have any chance for any breakout just yet. US dollar versus the Japanese yen. Something happened here, and we lost our our lines, and we lost our gap rectangle here. Nevertheless, a few of the levels that we can place on this market. This is one of them. 157.90. This is the technical resistance, and just recently we got the movement to the upside towards this level as well. 157.77. So is this a potential double top? That's a very good question right there. As you can see, this level has been rejected without any doubts. This level has been rejected as well. Since then, we just have a very narrow pullback to the upside. And now the technical supports. As you can see, the technical support sits on the very narrow level as well. So 154.41. 154.39 36, sorry. So this is the range that has been played since the extreme top located at 157.89 made November 20th. So the market is still moving inside of this range, waiting for a trigger to break somewhere else, rather to the downside. Gold market, new all-time high, 4,550. So the all-time high is a new one. As you can see, the lows towards the 4,429 are being bought back up, and the highs are being sold, which is a very interesting situation we got right now on the gold market. So let's just take a look at this for our time frame chart. We got definitely some sort of the rejection of this level. All right, so this is the rejection of the 4,550, and now this is the movement to the downside. This is the local technical support, and these dips are being bought back up. So everything here looks like a dip buying. Everything here looks like selling the potential local top. The black line is 4,500 level, but you can see that the momentum is diminishing here as we move above the 4,500 level, and it looks like this market wants to do some sort of the correction. We've done a spike down towards 4,445. Nevertheless, this is only the beginning of the deeper pullback. If this zone here is violated, right? So as long as we trade basically above this extreme 4,429, the outlook remains bullish. However, this market is very vulnerable for a potential movement to the downside, of course only for a pullback, because there is no setup, no clue, no information that the gold wants to move lower anytime soon. S&P 500 hits the level of 6,941 and consolidates the recent gains after very nice breakout above. Let me just place it here above this trend line. So we got this breakout here. Yeah, there you go, the breakout and movement to the upside. So the American indices are on the highs, hitting the extremely overbought conditions. Now consolidation, pullback down, but we are back above the 100 periods moving average yet again. So the market looks bullish. Obviously, if we take a look at the daily time frame chart, you can see that this is a very bullish market. It doesn't actually look like something can stop it these days, and there is no clues about the market top or reversal. Crude oil market is moving up and down quite often. Just recently we broke above the 4-hour time frame chart. We made a local swing high at 58.87, then we reversed strongly lower towards 56.65. There is still technical support located here that prevents the market from falling lower. Nevertheless, it was tested. For now, we got a little bit of a bounce. Nevertheless, as you can see here, we got a series of the lower highs, lower lows. The swing low is located at 54.98, and in the daily time frame chart, it still looks quite bearish, as we are approaching the yearly low. Yes, there will be yearly low. Yes, possibly. Yeah, yearly low is 55.12. So this is the 54.98. This is new yearly low, basically, right? So we even broke it by the few cents for the oil chart. So it absolutely looks bearish still on. Since this local top here made in the June, we got series of the lower highs, lower lows. So the perspective for the end of the year is bearish. And last but not least, the Bitcoin, very nice movement to the upside, back inside this zone here. I will not touch it just yet, but you can see even this 4-hour time frame, this 4-hour candle is inside of this zone here. So we back towards the $90,000, and this is very big level for the bulls. They need to break the $90,000 because the next stop is 94 or 95,000 local highs from the December 9th and the December 10th. So very nice movement out of this slow consolidation. Very nice spike in the momentum. Is it only temporary? Is it only another one of test of this supply zone? We will see quite soon. If we break above 90,588, we will have another local swing high, and then we need to watch the prices to see what is going on here as the market is moving higher. So that's about it. That's about today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.